Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta as always. And Ekta, I mean, this is a weak day. It has been since the beginning, you know, on the back of everything that's going on in West Asia. For our own markets also, we've slipped significantly from the top of the session. So it's an over 100-point fall that we are seeing right now. For the mid-caps, we've seen an over 400-point fall. So 1% in terms of just a fall from the top. And the banks have perhaps been the worst ever since the morning. Banks and the financials as well. Been the worst ever since the morning. The advanced decline also at 1:2 right now. So, I mean, weak whichever way you look at it today.
Hi, Pavitra. Yes, absolutely. And, you know, the cues with regards to the geopolitics will be something that the street will be tracking most closely. The statements from Biden with regards to his meeting and, you know, his entire trip to Israel will be something that the markets will be watching in order to ensure that there is no kind of escalation beyond beyond the regional conflict right now. But nonetheless, joining us this afternoon, we have Rajat Bose of rajatbose.com and Astha Jain, research analyst at HEM Securities, to answer all of your queries. Rajat as well as Astha, welcome to the show. Well, there is some signs of, volatility which have come into today's trading session. So I'm sure a lot of retail investors have a lot of queries in this market. Let's get to the first one. Kritika Sharma writes to us from Madhya Pradesh. She holds 10 shares of HDFC Bank, which she's bought at around 1,000 odd rupees. She wants to know if she can add more shares. Well, Astha, this one is for you because HDFC Bank came out with its numbers for the first time ever as an integrated entity. And, the brokerages were quite happy with the profit figure this time. But overall, would you be a long-term buyer of HDFC Bank? Would you add on to the current levels?
Hi, good afternoon to both of you. So talking about HDFC Bank, yes, on dips, definitely I'll go for a buying. And the main reason behind that and what streets are also liking is the guidance by the management or the bank's management. So they have guided for a good ROA of around 1.9% to be in the range of that, 1.9 to 2%. So that is looking good to us. So basically this guidance is which making us more optimistic rather than what they have posted on the financials front. So all in all, I think a buying on dips strategy is a better for this counter. So we recommend to buy more if some dips if it is available on some sort of dips, and our target for this counter is around 1590 or 1600.
Okay, got that. Rajat, what is your call on HDFC? Of course, the buy price over here is quite attractive, but what would you recommend at these levels? Would you say that it is a good place to be adding more because the stock has already corrected significantly?
True that the stock has already corrected significantly, but currently the situation on the technical chart suggests that there is more fall ahead, at least something like if it were to fall below 1500, then it could be headed for something like 1450 to about 1420. Around those levels, if one buys, I think the risk would be less because as of now, it is a distribution pattern and most of the bank stocks have been showing distribution. I'm not talking about the public sector banks. I'm talking about the private banks. They are not great. I mean, they are going to go down. So I would suggest wait. Get into this great stock at a lower level.
Okay, get into the stock at lower levels. Well, that's the word coming in on HDFC Bank. S. Jaykumar writes to us from Tamil Nadu. He says he holds 10,000 shares of Central Bank of India, which he's bought at 50 rupees. He's a long-term investor, wants to know what to do, whether he should hold or book his losses and exit. So that's on Central Bank of India. Well, Rajat, would you have a view on that? He's currently sitting on a loss. Do you think that there's further upside? He could probably just get to his buy price and exit?
Well, if you are a very long-term investor, then I would suggest that you can continue. But if you are a short-term player, then I would suggest that you can either exit here or you can put a stop loss below 42.50, because if it were to fall below 42.50, then it can actually slide down much further. Something like 35 to about 32.50 could be the target after it breaks down below 42.50. But if you are a true long-term investor, then the monthly chart and the weekly chart, they are suggesting that dips can happen now, but there is adequate buying interest still waiting to fill their capacity, or what, I mean, to buy more at those levels. So a long-term investor can buy at lower levels, but a short-term player should not remain invested or holding the position below 42.50.
Yeah, I mean, the stock has been seeing some cuts this month. It's down around 8% or so. But as soon as you sort of expand that chart and, look at a 6-month, 1 year, you'll see that the gains have been massive, over 75% in just a 6-month period. Astha, what do you suggest on this one for someone who's willing to hold for a little bit longer?
We recommend to hold this counter, although the results are expected on 20th of this month only. So I think a day or two, it's only, the time lag is only that much. So one can really wait till the results come out. And what we are expecting on the result front is that they might post strong numbers on the NII front, net interest income. But what we need to, what we need from all the banks is that the margin should be in the line which we are expecting. Because what happened, we are seeing some sort of margin pressure can be there on their financials due to this lag in the deposit rate hike. So that's really need to be seen. But in the quarter gone by, they have shown very strong performance on the net interest income front. I think more than 40% growth they have shown. And in fact, their asset quality was also great because they have shown a strong GNP and NNP ratios and a strong drop in GNP and NNP ratios in the quarter gone by. So if the similar performance will be there from the bank side on the 20th of October, then definitely I think this can be a good long-term story also. But as of now, I think wait is a better option. So I recommend hold, although my price target is 56 rupees at the current level.
All right, hold on to Central Bank of India for now. The next query comes in from Rohit, who writes to us from Pune. Now, he holds 40 shares of CG Power at 40 rupees. The stock, by the way, right now is closer to 390. That's why I paused for a moment. But he's made a great amount of money on this one. Astha, we all know how the stock has risen. Do you think, and he is looking at a long-term perspective as well, by the way, do you think it's ripe for lots more from here as well? Or do you think that, considering he's made so much money, he should take some profit off the table?
See, although he's making very good amount of money here in this counter, so I recommend to book some sort of profit, maybe 1/4 of the position or partial, because what we think that the markets for the mid caps, I don't know how they will be behaving in the future. So definitely, if a profit is so huge, then definitely one should book some sort of profit. Now, talking about the fundamentals of this counter, the fundamentals are looking good. The results which they have posted in the quarter gone by were good, and in fact, the order backlog is very strong for this company, and their focus is on to execute this backlog which they are having in their order book. So definitely, I think that will be helping company in posting very strong financial performance going ahead, because their order backlog, if I talk about only unexecuted order, it is more than 4,000 CR. So this is really looking strong to us. So I think in the long term, it may be a good bet, but in the short term, since the profits are huge, therefore, I recommend to book partial profit, or at least 1/4 of the quantity should be booked out as a profit in this counter.
Okay, well, Rajat, what would you recommend? And before that, we have the Polycab numbers on your screen. Net profit is much better than our poll, so it's coming at around 423 odd crores versus a poll of around 388 odd crores. Remember that Polycab has just gone from strength to strength in terms of a stock performance. We'll wait by for more details with regards to the revenue as well as the margins. But nonetheless, the revenue too has beaten street estimates, so it's coming at around 4,218 odd crores, as compared to our poll of around 4,068 odd crores. So that's the basic which is coming in. As you can see, the stock is recovering and we can see it inch up into the green. Would you have a view, Astha, quickly on Polycab and, barring the numbers, maybe even a long-term perspective, if you could add in?
In fact, we were also expecting strong numbers because their wires and cable segment is really working very good. In fact, in the last quarter gone by also, they have shown a strong jump in that segment. And the way the infrastructure story is picking up, so companies really getting very strong demand. So I think this segment is really working good, and that's why we are seeing strong results. Although it is running at around like more than 5,000. So the stock has seen a long jump. So I think maybe some sort of, consolidation maybe it take. But yes, it is a good long-term story, and we are expecting strong numbers going ahead also. So our target is around 5,600 at the initial level. So one should remain invested in the counter.
All right. By the way, we have some more numbers coming in for Polycab. The margin has come in at 14.4%. This is actually better than what we saw last year as well as what we saw in Q1. Remember the poll that we were working with, we were expecting margins to be a little bit lower than what we saw in Q1 on account of higher ad spends. That's not been the case. It's gone up. So it's 14.4% in terms of the margin. So there's been a beat, across the board. The EBITDA has also come in at over 600 crore rupees versus our poll of 550 odd crores. So that stock, it has moved a little bit higher, but across all of these parameters seems to be quite a beat. And this is after the stock has already run up, 120% this year, right?
Absolutely. And I think the maximum performance for this stock all the way from, say, 2019 has been around 744%. So that's the kind of returns that you've seen. So maybe even if the stock doesn't react to its numbers, a large part of this good news is probably already factored in. But Rajat, what would you recommend on a stock such as Polycab? It's given fantastic returns for a long-term investor. Would you say that it's prudent to buy at these levels as well?
It's not at all prudent to buy at these levels, because if it were to fall below 51.50, it is likely to climb down and even test 4,500, despite the fact that it has posted very good results and all that. But look at what you just, the statistics that you have given. In 1 year, 120%, over a period of 3.5 years, it is already 700%. So all that is already factored in. It's a great company, but buying at this level, it's not a great stock. So you wait for at least 4,500. Have patience, you will get such levels, then enter.
All right, got it. That is the technical view on Polycab. Like we told you, numbers across the board are a beat, but the stock is coming off a little bit. Perhaps some profit taking seen on what is looking like quite a good set of numbers. The net profit on a year-over-year basis is up 60%. Revenue is up around 27%. If you look at it on a year-over-year basis, over 4,200 crores in terms of the revenue for Q2. This is for Polycab. EBITDA also has gone up around 42%. A beat, whichever way you look at it. The margin, like we were pointing out, has come in at 14.4%. What we had last year was around 12.8%. Rajat, before Polycab's numbers came through, we were talking about CG Power. So I do want your thoughts on that one as well.
CG Power might give a small bounce, or it can continue to move down. Minimum, it is in the short term, it is headed for 360. I would suggest the investor to actually book part profits, if not full profits, because it has run its course, at least for the time being. Now what you will see is some kind of a sideways movement. So instead of getting into sideways movement for this stock, you can actually enter some good stock at lower levels. Maybe an HDFC bank, after it falls, then you can enter. CG Power immediately won't be giving much of great returns. Sorry.
Okay, all right. CG Power as well as Polycab. So that's the view coming in from Rajat on both those stocks. We'll do one thing. We'll take a break with the news that there is some amount of sluggishness which is continuing in the markets, but we've not seen any kind of incremental weakness. As of now, we still have the Nifty, which is at 19,720. So let's see whether it manages to actually make a dash for 19,800. And we have the sensex, which is down close to around 500 odd points. We'll take a short break. We'll answer more queries on the other side. Stay tuned. Welcome back. Well, you're still tuned into Your Stocks on CNBC-TV18. We still have with us Rajat Bose and Astha Jain to answer all of your stock queries. But let's get to another question now. We have a question on Coal India. Now, Balkrishna writes to us from Bangalore, holds 580 shares of Coal India, which he's bought at 260. He's a short-term investor and is focused on short-term gains for 3 to 6 odd months. He wants to know what to do, whether he should hold or sell them now to book profits. Well, this is an interesting one, Astha, because Coal India has actually done very well in terms of performance. Well, we do have the US president speaking. Let's cut across first.
Somewhat more rational. You know, Americans are grieving with you. They really are. And Americans are worried. Americans are worried because we know there's a This is not an easy field to navigate, what you have to do. But the fact is that Israel, as they respond to these attacks, it seems to me that have to continue to ensure that you have what you need to defend yourselves. And we're going to make sure that occurs, as you know. And we have to also bear in mind that Hamas does not represent all the Palestinian people. And it has brought them only suffering. You know, years ago, I asked the Secretary of State when he and I were working in the Senate to write something for me, and he said, he wrote a line that I think is appropriate. He said, it's not, we lead, not just, well, I won't go into it, I'll wait later, taking too much time, but the point is this, that I was deeply saddened and outraged by the explosion at the hospital in Gaza yesterday. And based on what I've seen, it appears as though it was done by the other team, not you. But there's a lot of people out there not sure. So we've got to overcome a lot of things. And it also means encouraging life-saving capacity to help the Palestinians who are innocent, caught in the middle of this. And well, at any rate, that's who we are. Not just me, but I mean, that's who the United States is. And it's just not the example of our power, it's the power of our example that's almost as important. The world's looking. Israel has a value set like the United States does and other democracies. And they're looking to see what we're going to do. So, Mr. Prime Minister, I'm very happy to be back in Israel with you. Thank you for having me, and I'm looking forward to having a thorough discussion about where everybody goes from here. But thank you, and I want to say to the people of Israel, their courage, their commitment, their bravery is stunning. It's really stunning. I'm proud to be here. Thank you. Thank you.
Okay, so that's the US president, and we'll keep getting you excerpts. I'm sure that's going to be an extremely busy press conference that both the leaders will have a lot of questions to answer. But nonetheless, it is important to say that, President Biden did mention that he believes it was the other team and not Israel that was responsible for what took place in the hospital in Gaza. So I think that would be an important factor to watch out for. But nonetheless, let's see what does in fact come out of it. The statements from the US president are flashing on your screen. But we did have a query on Coal India. So let's get back to our queries with our guests. So Astha, what would your view be? Coal India has been just going from strength to strength.
Yes, and we are recommending hold with a price target of 335 at the present juncture of time. So talking about this counter, they are really seeing the strong, demand, as well as, the strong volume uptick is also there. So that is really helping in the company in showing the strong financial performance. And in fact, an increase in the international coal prices is also helping the company. So all in all, I think Coal India is looking still strong to us going ahead also. And we are positive on the stock. Buying on dip strategy is also recommended. The initial price target can be set at around rupees 335.
Okay, 335. Rajat, what is your view on Coal India? This is someone who wants to hold for up to 6 months. 3 to 6 months is what he's saying. Do you think it makes sense to hold with that kind of time horizon? And what would your target be on the same?
See, 25th August, it was at 227. Today, the high is 319.75. 54 days, more than 90 points. It's a vertical run. So unless the investor's horizon is very long, if I were in his shoes, I would have booked profit and got out of it. But suppose if he wants to see whether the 320 resistance is overcome or not, in that case, there should be a stop loss below 300. Don't stay put in this stock below 300 if it were to start coming down. This is a vertical run. Sooner or later, you will see, because the 50-day moving average is now just around, say, around 270 or so, 274. So it's pretty stretched in any kind of parameters.
Okay, all right. Let's get to the last query then. We have Anurag Bakshi, who writes to us from New Delhi. He holds 30 shares of IndusInd Bank at 300 rupees. Wants to know what to do, stay invested or book his profits. Well, we don't have, it'll be an interesting set of numbers, but nonetheless, what would you recommend quickly on the technicals for that one, Rajat?
I would say IndusInd Bank is also showing some distribution, but choose a stop loss that is your calling. And I mean, if it were to start falling, then get out of it, because the bank stocks, if you remember, Ekta, that as far as the bank stocks go, I said that I'm actually pretty much negative about the private sector banks. Most of them are showing distribution. This one is the last one, and the distribution pattern is clearly visible. Chances are that you will see this falling. Once it falls below 1400, it can head down to something like 1320 to about 1310, where the 200 exponential moving average is located. I mean, it is around, say, 1293. So 200-day exponential moving average would be tasted. So get out of it.
The view on IndusInd. With that, we're going to wind down. Rajat as well as Astha, thanks a lot for joining us on this edition of Your Stocks. IndusInd Bank's numbers should be out very soon as well. We are going to wind down with the markets down a full 105 points. We're holding just above that 19,700 mark. The banks, of course, having it the worst today. 475 points gone on the Nifty Bank. The mid-cap index also from the highs of the day is down 450 points. Thanks for tuning in. You can send us any queries that you have and we will take them up with our experts. Closing bell is up next for the final hour of trade today.